So essentially there are two projects that you've got. One which is Segovia. Now that's the one with the high grades at the moment, and obviously producing somewhere in the region of 193,000 ounces. So that's a significant producer. You've also got Marmato.
Correct.
So tell me about that. It was a bit earlier in the process.
Segovia is very much developed. It's one of we operate 3 of 23 mines in a concession that is truly a private property in Colombia. A rarity. We own the mineral rights and the land, so we don't pay any royalties in the property. It's not mature, but it's fairly mature, much more mature than Marmato. As you said, we produce over 190,000 ounces at a very low cost. Marmato is our next project. Marmato is a project that started actually before Segovia. We started by developing a low-grade open pit mine in 2011. Unfortunately, with the prices of gold going down, the project became very expensive to build. It was over $1 billion. So we changed the design of the mine by going underground and by developing the underground part. Today, we have a project that is in the development stage. We produce 30,000 ounces there. Now we're going to go into an expansion phase. The expansion phase is going to be to take the production to 180,000 ounces.
Right, okay. So I want to talk quickly about your board, if we may, because it kind of leads on to the next area I want to talk about, which is how you've structured the financing around this one, because you've got some very interesting structures in there and I'd love to talk about. So looking at the directors, it seems to be very legal and financial focused. The management team is very technical. I mean, how does that work? How do you work with that?
The way we like to arrange our board, we're mostly financial, and that's where we come from, but we come with an experience of almost 35 years in the mining industry, so we understand. And
mining. Outside as well, I understand. Yeah.
Yes.
Yeah. We should talk about it in another conversation.
Well,
but
sure.
Okay.
So our board, it's usually a board that gives strength on the financial side, that gives strength on the legal side, and mostly on the compliance side.
And why have you done that? Is it because Colombia is difficult to operate in, or is it just that
Colombia is a very challenging place, like all South American place. We, as a management, choose to live in the country. So we live, myself and most of my board, with the exception of 3 of the board members, or 2 of the board members that live in Canada and the US. The rest all live in South America, and they all live in Colombia. So we're very hands-on management team and board. One of our directors is an ex-minister of mines, so he knows
Mr. Martinez.
Mr. Martinez. My partner and co-founder of this company, Miguel de la Campa, has been in Latin America, involved in natural resources for 40 years, and so have I. So for us, the separation, the management team, it's very important that has the know-how and has the know-who. That's the most important thing to have in Latin America.
The know-who.
The know-who is just as important.
I think so. Okay. But tell me a little bit about them, because I see a lot of years of experience here.
Well, Lombardo Paredes is the CEO of the company on the management side. Lombardo comes from he's an engineer, he's a mechanical engineer, but he was the head of the largest oil refinery in Venezuela. Managed 7 million barrels of oil a day in refineries all over the world. So although his experience also comes in mining, because in Venezuela, when he was in Venezuela, they dealt with oil and mining was very much related with iron ore and things, so he understands the business. He is really the driving force in the company to taking the company into the development that we've had in the last 4 years. The CFO is a guy with 25 years experience, worked for major mining companies. Mike Davis, financial guys that understands what needs to be done, that has great controls.
Right.
And
how long has he been with you?
He's been with us for 20 years almost.
Okay, wow. Okay, like a lot of people here. Have been
Like
with you a
all the
long
people,
time.
our local people, I would say the youngest is Jose Ignacio Noero, has 12 years working for us. He's
A
he's
youngster.
baby.
Yeah, yeah. I want to talk about Mike Davis and your experience, because if I look at some of the structures you mentioned in your PowerPoint, it's pretty interesting. It's unconventional, but it's allowed you to get into production and start throwing off cash, which you're doing, and you're now in the process of paying down debt, etc. Explain how you've gone about your thinking. Why have you structured things this way?
Well, we went through the good times of when mining and was very easy to raise money. There were a lot of funds in the world and everything. In the last 6 years, it's become very challenging, very difficult to develop projects. Through ourselves, our management team, Mike Davis especially, that is fantastic on the financial side, we had to reinvent ourselves in ways of creating liquidity in the company to build the projects, but at the same time maintain the structure of the company of not getting super diluted.
Right, and that's tough, because a lot of people are just happy to survive when it gets tough. You've actually been able to build this out and get into production, significant production. You're a mid-tier producer now.
Absolutely, and on our way to become a large producer, because with the Marmato development, which is our latest financing that we're going to be doing, we are going to go to 400,000 ounces.
Wow.
So then it becomes a completely different company. How do we do it? We started looking at the possibilities of doing things. These days, when you go into streaming, the streaming is a very expensive way to finance yourself. It's dilutive to the investors. It's very punitive to the investors. And our group, my partner, myself, are probably the largest shareholders in this company. We are very much aligned with the rest of the shareholders. So for us, it's important that we don't do steps that prejudice the investors. So we started looking at what's the best way to finance this thing. We have a very solid company. I mean, if you look at Gran Colombia, we put out our financials yesterday. They were fantastic. We've been growing for the last 4 years, every quarter, 15 to 20%.
Which is great. That's PE type returns.
Exactly.
That's great. Okay.
So the company has taken the cost of production when we started taking the mine over of $1,100 an ounce. We're down to $540.
Fantastic.
So,
1,100 down to 500.
So when we've been very successful in establishing parameters, and that's been through the financial thing. So the next step was, how do we finance our project and how we finance ourselves?
Right.
The most important thing that we've done, we as investors and as founders of this company, put our money where our mouth is. So every time we...
What does that mean? How much money?
Well, the 20% of the debt that was $150 million debt was management.
Wow.
It still is management.
Fantastic.
So management believes in his company and his assets. We had to find ways, since the banks don't lend money, since the streaming are very expensive and everything, we started thinking of what's the best way for us to finance. We actually were the first one in Canada that created this kind of bond that we did.
Tell me about that. I've marked them on here. I want to know.
It's a fantastic piece of paper. Yeah. I mean, we own it and we love it. We do it in such a way that it's beneficial. Instead of giving the money to a bank or giving the money to a streaming, we give it to our investors, because most of our shareholders are the guys that own the bonds.
So what are the terms on that?
The terms of the bond that we have, the only bond that we have, it's an 8.5% coupon.
Nice.
We cover the downside, which is $1,250 gold. So we guarantee that you will get $1,250 gold.
Okay.
You get all the upside on the amount of money that was lent to us.
Right.
So in the case of this case, when we started the bond, was $100 million. We're down to $68 million in the first year. We already paid a very large.
So what's the
chunk.
term? When's this due to be
The
paid
terms, it's going to be paid. The terms is 2024, but we're going to
Okay.
finish paying it in
off? You get an
2023.
early redemption, no penalties.
No penalties, not because it's at the end of 2023. But the paper is a fantastic paper because it gives you the coupon, steady coupon.
That's
It gets
interesting.
paid, interest get paid on a monthly basis, so it keeps a discipline. And the principal gets paid on a quarterly basis. Plus, on the quarterly basis, you get a kicker if it's above 1250.
Wow.
So it's a paper that gives you 11% return.
Yeah.
Every month we set an amount of gold aside in Scotia Bank, and at the end of every 3 months we cash in the gold, we pay the principal, and
Okay.
so on.
Right, so you've got some gold set against the
Correct.
balance.
It's
Okay,
guaranteed.
fine, and that's physical gold
Physical
set against
gold.
that. Okay, interesting.